Let's get to the closing bell exchange, as we've seen a lot of can change in the final hour of trading. So what to expect today? Let's try and make sense of today's trading patterns. Bob Pisani, you just saw Mandy Drury. She's joining us as well. Rick Santelli and Lee Munson of Portfolio Asset Management joining us today too. Bob Pisani, I guess the market figured it out on Friday, and there was no need to react wildly today, although the Greek stock market was very strong today.
Yeah, we're moving in a fairly narrow trading range, about 80 points on the Dow. With that said, I think this could be a very telling week. I think if the Federal Reserve makes some kind of signal on QE, on some type of QE, and I think if Ms. Merkel indicates some flexibility, at least on loosening the purse strings, she doesn't have to sign a treaty, some flexibility, that could be a big signal to the markets. If they don't get it, I think there's going to be some kind of disappointment, though.
Rick Santelli, do you think the Fed's going to announce a new round of quantitative easing, or at least extend Operation Twist to keep low rates on the long end of the yield curve?
Well, I'm probably the only person around on the Chicago Mercantile Exchange floor who believes the answer to that question is no. But I have to tell you, I'm in the minority's minority. Every trader I know thinks that in some way they're either going to extend Twist or alter the maturities because they're running a bit low on 2 years, but they're going to do something. And that big rally we had last week, many believe it was more about that dynamic with regard to the Fed than it even was about accurately predicting Greece. But the issue is, what will it do? And that's for a whole nother discussion regarding the Fed.
Yeah, you know, Steve Leisman, I don't know if you saw the Jan Hatzius report over the weekend. Basically, we're all looking for any action out of the Federal Reserve. Mandy, let me get your take on this, because Hatzius over the weekend at Goldman Sachs, the chief economist there, said that he's expecting the Fed to ease. So what would it look like? Are we talking about, asset purchases? I mean, you can't go much lower on interest rates. So if we were to see an easing from the Fed, what do you think it looks like? Yeah, look, I really don't know. I mean, it's a difficult one to work out. I think what's really interesting here is it feels as if at this stage there's just a real big anticlimax and a sense of disappointment in the market. I mean, obviously no one wants to be short going into the Fed meeting, which is probably why we're holding up reasonably well today. But at the end of the day, I think nothing's been solved with regards to Greece. Obviously, the new government mandate in Greece is going to be a very difficult one to hold on to if they don't turn around the economy pretty soon. Right. And if we continue to have political paralysis there as well, then they may end up leaving the Eurozone regardless. So there's so many things to consider right now, but all said and done, our market isn't looking so bad today. You're right. Lee Munson, what's your take as an investor here? Are you expecting the Fed to ease, and what might it look like? What would it be? The end of Operation Twist, I guess, on the horizon.
I want to send out some positive feelings to Chicago. You're not alone out there. I myself don't think that anything's going to happen. I think you should call a buddy of mine, Mike Dart over at MKM. He's always pointed out to me one basic thing over the last few years. When you get the 5-year break-even spread at 150 basis points or lower, that's when we're going to see easing. Right now, it's 180, 190. I don't think there's any way the Fed's going to do anything. And what if they do extend Twist? It does nothing. It doesn't help interest rates go up. It doesn't help the market go up. So I don't even care if they do Twist, but I'd say until you see those break-even spreads go below $1.50, nothing's happening. People west of Mississippi, Albuquerque, Chicago, we're like-minded and in the minority.
Rick Santelli, Spanish yields were above the magic number of 7% convincingly today. Why didn't our market fall apart here? Why wasn't there a rush to safety in our markets today, do you think?
Because I think the 150s represents the notion that Spanish yields not only will go above 7 as they have, but maybe test 8 or 9%. I think that's what's already built into the cake, and why you get so little volatility in treasuries. Now, why didn't it go lower? I'll use my same analogy, and that is the beach ball underwater wants to pop up. These interest rates, it takes a lot of global weakness, horsepower to keep them there, but I think the balance is right. I think the 150s represent the notion that we are going to have funding issues in Spain, potentially in Italy. Greece eventually defaults again, and I think that's exactly what these rates are telling
Rick, this morning, Art Cashin floated an interesting idea. He said the most radical thing the Fed could do, everyone wanted to know what the Fed could do, would be to expand their inflation range from 0 to 2% to 0 to 4%. I don't know if that would ever be in the cards, but that would certainly move commodities and commodity stocks. What do you think of that idea?
That's something Paul Krugman has floated around, too, by the way.
Yeah.
I think that embedded in Art's always wise commentary is the notion that whether it's inflation or whether it's that interest rates shouldn't be this low, may not be as low as long as people think, would get the get off the fence crowd to do something.
Right.
You know, unlike Europe, I think we have a lot of positives in this economy.
Yeah.
We just need to light a fire behind the investors to actually do whatever investing they're sitting or refraining from doing.
That would be a surprise.
Yeah, but
in the market,
we
though.
have that already, though. We have small business, as far as expectation of hiring, we saw those numbers last week. Small business owners are asked, are you going to hire 6 months from now, meaning after the election? They said yes. They weren't asked if Romney or if Obama win. So I think there is a silver lining, and the growth engine right there says 6 months we're going to have certainty, 6 months we're going to start hiring. Already year over year, 12% lower in jobless claims.
I also wonder if there is any further move from the Fed, whether or not it would actually undermine confidence, because it would suggest out to the market that, it sees things bad enough to warrant further easing. I mean, it just is a sort of a counter-psychological thing.
Right. All right, gang. Thank you.
All right.
Good discussion. We'll see you later. Lee, thanks for joining us today. Appreciate it.
Thanks.